Let's see what happens. This coin's been spitting up some bears. Ooh. Another bear. Good morning. Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. I had to go back to my live Lauderdale by the Sea cam here at the pier. I haven't seen it in a while. I haven't posted it up in a while. And of course, you know I love my Deerfield underwater cam and watching the fish all the time. But it's like eating sushi all the time. If you do it too much, don't you kind of get sick of it? I don't know. So let's move along to a little quote here I wanted to bring up first. If you're playing a poker game and you look around the table and you can't tell who the sucker is, it's you. So, and I'm not sure if Paul Newman made that quote. Was it in the movie? Was it an original quote by him? I'm not sure. It doesn't really matter. The quote's what's important here, and I do like Paul Newman. I was a big fan of him. Cool Hand Luke, as some of you may have seen a long time ago. What we've got here is a failure to communicate. So, and that's kind of what's happening in the world. We've got a failure to communicate, at least the truth, it seems like. Now, what I wanted to point out in this particular video today is we're going to talk about if you don't know who the sucker is, it's probably you. And one of the reasons that I do this video, there's two reasons I do this video. First, it was suggested to me that I start doing local videos for my business because it would be good for business. Obviously, I'm doing this for financial purposes. And not my sole reason, but I'm doing it for financial reasons and trying to get more local customers coming in. And sorry about that, I had to adjust my chair here. Create more local business. And it was also a potential good way to, explain to people things that they can watch before they come into my store. It cuts down on time a little bit. It lets them know who I am a little bit. And, I talk about a lot of things that they may ask questions about in the store. So a couple reasons. Again, to get people to come in my store, this is a marketing tool that I use locally for me. However, there's a lot of people that don't. And I discovered there's a lot of people outside my area that watch this video as well. And there's really no financial incentive for me there, but I do enjoy showing people things and teaching people things and teaching them how to spot the sucker at the table and who the players are. And again, this is something I talk about all the time, as you know, but these are very important things to talk about. If you're going to buy gold and silver, I don't care if it's 1 ounce, I don't care if it's 1,000 ounces. You need to know the game that you're in, how the game is played, who the players are, who the manipulators are, who the casino is. So these are all things that I like to teach you guys, that aren't familiar with that kind of stuff. That's my kind of goal here. And, it's all about not being the sucker at the table. And if you listen to what I've been trying to explain for the last year and a half, all the things that I've learned in the last, I've been doing this since 1977. As a kid, I started in the second, with my father working in the business. And I've been in this location since 1995, so I've been doing this quite some time. I also have a very keen sense on spotting patterns. I don't know what it is. Maybe it's just a lucky trait that I have, but I can see patterns. I can spot patterns, and it's been good for me as far as this market goes, being able to spot patterns. And I question myself when I was able to spot patterns many years ago, but more and more I'm realizing that, damn, I'm right on this stuff. So I guess that comes with age. You start to realize that, hey, maybe you do know something. Let's take a look at markets this morning. Gold, 1744. It was 1725 the low and 1747 the high, so it's up 1425. I suspect it has something to do with the CPI reports that were out this morning, inflation reports. Go figure. Silver at 23.25 was the low, 23.54 overnight was the high. Currently 23.43. Platinum at 1,010. Wow, take a look at that. It just rocketed up past that 1,000 mark. Again, platinum is kind of platinum's like a tell, it seems like, for gold and silver the last couple of weeks. Don't ask me why or how, and maybe it's just a weird coincidence, but platinum's kind of been leading the group. It went down before silver and gold did. It went up before gold and silver did, and it kind of independently too. You saw this in red when these were in green, and then you saw just the opposite happening here just recently. So Platinum's still a great buy in my opinion. No less. My opinion on this is that the reason prices were monkey hammered down is, I think, I'm looking at the big picture now. Again, CPI numbers were out today. CPI numbers are kind of dismal, I think. Not quite sure. I got to take a look, but I still think inflation doesn't look too good. And I believe the CPI numbers didn't come out that great as well. So I think that the Fed, or let's not say the Fed, I want to say the central banks kind of knew that inflation is starting to raise its ugly head. It's going to show up in the prices of gold and other things and silver, and they did. They monkey hammered it pretty much to. I think if they hadn't monkeyed hammered it with the prices, with the inflation print coming up and all this bad news coming up, that gold was just going to skyrocket and get out of their control. And I don't think that's good for central banks, because I believe there's central banks in trouble. They still haven't converted their paper into gold, and that's might have even what we've seen last week is a big conversion of that paper into physical metals. However, I didn't see who the buyers were. I'm not quite sure if we're privy to that. Of that $4 billion notional, I didn't see where it went. I didn't see if it got turned into gold or precious metals. So I don't know exactly who did it and what, but well, we do know who did it. It was a giant entity, and likely the central banks. But we'll get into that in a moment here. Take a look at these prices. They're up today. Let's move over to ZH, take a look and see. I like ZH because that different different viewpoints, different opinions, different narratives, unlike corporate news, which hands you the same narrative all the time. And let's take a look and see what is going on out here. Not too much as far as gold and silver. Once upon a time, this was a good article. I quickly read over this, and here we go. Once upon a time, 1% inflation was a major emergency. Good article by TBD, and it talks about inflation throughout the centuries and stuff, and how even inflation at 1%, what they say, even at a 1% inflation rate, after 100 years, your inflation has tripled, more or less. That's pretty scary. Oh, there it is. That's right. Even if inflation is just 1% per year, prices will nearly triple after a century. So, not quite a lifetime, because we're not living to 100 quite yet as an average, but almost a lifetime. Inflation is, 1% inflation is a triple. And what they do now, they consider 2% acceptable. So what is 2%? 6 times. Oh my gosh. 6 times. So in our lifetime, if they want to keep inflation at 2%, that means the cost of everything that we bought is 6 times more than what it cost us when we were younger. That's pretty scary. That's not good. And if you really think about it, so you made an investment in your home, you made your investment in your stocks or whatever like that, and you think you're doing really good because you only paid $3 when you were younger for this stock, and it's worth $40 now. However, what you didn't factor in is that take that 3 times what is it? Oh man, I forget the number I was just going to throw at you. But look at the inflation, the deflation of the currency, more or less. If it's gone down 6 times, that means that stock actually would cost you 6 times more, which is $18 a share. So what did you really make when you factor in the cost of the deflation of the currency, inflation of products, and what the inflation really is? It's deflation of currency. What you're seeing right now is a devaluation of the dollars, pesos, and rubles of the world. Again, that's my opinion. Really good article by TBD on ZH called "Once Upon a Time, 1% Inflation Was an Emergency." It is a long one, folks. Otherwise, I kind of read it over to you. But I figured, hey, listen, give you some homework. And besides, if I'm doing all the reading for you, what are you going to learn? So, well, maybe a little bit. It's like someone reading a book for you. But there's so much to go over here. I can't do that one today. Core CPI slows as soaring used car and rent car costs decelerate. So I guess the core CPI showed maybe it did slow down. That's kind of surprising why gold would be up today, though. I'm going to have to take a closer look at this today and look at the numbers. After soaring at the fastest pace since 2008, economists expected the surge in consumer prices to slow very modestly in July from 5.5 to 5.3. They were wrong. Oh, I guess the CPI came in hotter than they expected. It came in slightly hot at 5.4. That remains the highest since 2008. So yes, folks, Just as I thought, the CPI did come in high, and of course the Fed knew this, or the central banks knew that the CPI was going to probably come in high here, and maybe that's why they banged gold as well when they did as well before these numbers came in. Otherwise, gold might be what, 2,000 right now, or 1,900 or something like that. Just a thought on my part, speculative on my part. Let's move along here to some other articles. All kinds of crazy shit going on in our world, folks. I can't disagree with that, but on the other hand, I'm not quite sure that's a good thing either. So let's take a look here. CPI, Manchin slams irresponsible 3.5 trillion budget. Boy, I guess this guy's what they call a blue dog Democrat. You don't see those very often anymore. He's like a unicorn, probably. Let me move down here. China flight departure collapse amid Delta virus spread. It's tough to say. I don't want to get into this right here as well. Again, there's plenty of people talking about this, and I don't want to have my videos stomped on by the gods at YT. Future dip, yields jump ahead of critical inflation report. Well, we already know this is an older article. The CPI already came in at 5.4. It looks like a little bit higher. And let's see, what else do we got going on here? Not too much. Oh, here. Good article here. I'm going to bring you over here because I already clicked on his site. This is Matterhorn Asset Management. Matthew Piepenburg. Man, this guy writes some great stuff. I got to hand, he really does. I enjoy reading his articles. I'm on the exact same page as him, and he writes way better than I do. So. And let's take a look here and see what gold volatility Stanley Fischer and the CBDC can tell us about what lies ahead. Lies, there you go. What lies are ahead? Who's the sucker in the room, folks? Below, we are unpacking the implications behind central gold purchases rising, negative real yields falling, and Stanley Fischer's Fed speak cringing, I guess. What bankers do rather than say. By now, the open farce as to the central bank transparency has been made abundantly clear. Looking for plain speak honesty in such circles is akin to looking for an honest man in Parliament. Interesting. Thus, rather than just follow what central bankers say, it's often wiser to watch what they do. Wow, this is a mantra that we've been talking about over and over and over. What have central banks done? What do central banks own? I've said this over and over for years. They own gold. They don't own digital fiat inside their vaults. They actually own vaults that hold gold. And they're trying to pawn off paper on the people. Who's the sucker in the room? You're not the sucker, and this is what we're trying to teach you. You're not going to be the sucker if you're not the pawn. You want, or you're not going to be the sucker if you're not going to let them pawn off a deflationary currency on you without doing anything. And again, what do they hold? They hold gold and silver. Let's take a look at this. What he says here: central banks gold purchases. Towards the end, it's worth noting that central banks have been buying gold lately and at significant levels. And he points a great chart here I wasn't aware of. Gold buying on central banks surged in the first half of the year. Thailand, Hungary, Brazil, India, Uzbekistan, Turkey, Cambodia, Poland, Mongolia. Now, of course, we know most of the Western countries have been stockpiling gold for many, many years. China has been. In fact, China, we don't know how much gold they actually own because they don't release the numbers. And for many years, all the gold that they were mining worldwide and in their country would just go straight back to China. So don't know how much gold China owns. They're probably one of the top gold holders, if not in the top 5. They got to be in the top 5 for sure. United States supposedly owns a bunch of gold, as does London, unless they've leased it out. And maybe that's what they're trying to get back right now. That's a whole different story. So what the point is, what do they hold? What does the casino, what do they hold? They hold gold. And I'm calling central banks the casino because they are the ones that run the whole show. They make the rules. They can change the rules. They don't even have to tell you what the rules are. The casino runs the show. And what does the casino own? They own gold. So let's move along here. The COVID, geez, I hate even saying the word. So convenient. Needless to say, the growing flight to gold by central bankers is and will be attributed to growing concerns about the latest C variant and its economic threat to financial security. Rather than enter the rabbit hole of the policy debate and its impact on markets, jobs, psychology, science, math, political courage, or basic honesty, I'll simply remind readers that the U.S. dollar's threat to the global financial security existed long before 2020 arrived, as pre-2020 global debt was at $250 trillion to the GDP of $85 trillion. Levels were already more deadly than the well, you know what I'm going to say. As we've discussed elsewhere, there's no going back to normal, as normal died long before 2020 arrived. And this is absolutely true. They're going to use 2020 as an excuse. Central bankers are going to use 2020 as an excuse why the economy took a shit. Governments are going to use that as an excuse as well. And what are they going to do? They're going to roll out their CBCDs or whatever the frick their digital currencies will be, because that's the next step, folks. Turning us into a cashless society, so they can credit you or debit you whenever they want, and they know exactly every cent you own, where it goes, who it goes to, and again, when they want it, they'll take it away from you. But again, that's another story. I don't want to digress here. And as we've discussed, there's no way. God, Matthew Piepenburg, I got to hand it to you, man. We talk about the exact same stuff here. But again, rather than debate the disastrous results of shutdowns, debt expansions, monetary expansions, and individual freedoms killed by 2020 policymakers, rather than a convenient I'll avoid the math of those facts. Besides, and as now a popular joke reminded me, there's a 99.69% chance, blah, blah, blah. All right. Negative real rates, no joke at all. What's not a joke? However, is the growing yet unspoken belief among increasingly nervous central bankers that inflation rates are going to continuously outpace interest rates. In other words, the trend towards increasingly negative real rates is growing. And as we've explained in details elsewhere, gold, as well as BTC and mining stocks, loves real rates. The evidence of declining real rates is particularly obvious in the U.S., where U.S. 10-year real rates are breaking new lows. All right. Not going to go into the technicality of this. You folks see where this is going exactly. And give me 1 second. I need to take a quick sip of my coffee here. Sorry about that. And let's go down here. Looking forward, unless rates rise measurably, gold prices will rise sharply despite recent price hits, which is temporary and foreseeably tied to Basel III implications and the road towards CBDC, central bank digital currency. Themes I will address more in detail later in a later report. For now, we don't see real rates rising anytime. All right, I'm going to move along here. Simple math, simple gold. The most critical market force is debt. Stanley Fisher's word, what the bankers say and do, action matters, and they are predictable. Wow, it's a long article here, folks. I could go on reading here for a little while, but again, let me take a look down here. And of course, more printed dollars just means weaker dollars, and weaker dollars just means investors are counting their inflated market profits with less meaningful measures of value. Well, there it is in a nutshell. No less. Man, you have to read this article by Gold Switzerland by Matthew Piepenburg. Wonderful job, and goes into a little more detail that I didn't get a chance to read to you here. Let's move along to GATA.org. Pretty cool. We were talking last week, or I had mentioned the World Gold Council is supposed to be the marketing arm of all the miners and the gold market in general across the world. And they have completely avoided the even talking about or mentioning anything to do with manipulation, and the people that have been caught manipulating. They still didn't admit to it. After this big whack down, $4 billion notional whack down that was in our face and obvious who it was, according to this article right here, pretty cool, it embarrassed them, and good. They should be fucking embarrassed. They've fallen down on the job a long time ago, and they haven't done their job. And let's see what they say here. Big intervention smash humiliated the World Gold Council, and as I said, good for them. Dear friend of GATA and gold, painful as this week's government intervention against gold was for gold investors, at least it may have demolished what was left of the credibility of the World Gold Council. True, and GATA.org has been pointing this out for years. The Council's chief marketing strategist, John Reed, tiptoed up to the intervention and then ran away, writing, well, it could have been the sell-off, been a fat finger or something malicious. Either is possible, and that was his comment, but he had to admit something happen, and apparently they're embarrassed by this, and good. Their credibility sucks anyway. Credibility is zero. The fact that they won't bring this up, and they're supposed to be the marketing arm for the mines all over the world and for the gold market in general. I don't think so. They're probably the marketing arm for the central banks. That seems more likely. Let's take a look at another article. By the way, this is GATA.org. If you're a new listener here, you have to have GATA.org on your website. These are the guys that tell you how markets are manipulated. Sorry about that. I had my phone too close to the mic. How the markets are manipulated, who the players are, what the casino is, how the casino changes the game. How it tells you all this great stuff. You need to be reading this. If you don't, you're really not in tune with the gold and silver market, and you probably shouldn't be buying it. Craig Hemke, where is it? Matthew, the gold market's a why me moment and the dark side of manipulation. I think, is that the article we just read? No, I don't think it is, but no less. I'm going to recommend that you guys read this article for sure, at least I think that might be a, let me see, is that an interview that we can read? No, it might be. Hang on one second. Yeah, there we go. Gold's recent moves. More technical stuff there, right there. Sorry about that. Didn't mean to bring you down that rabbit hole. All right, folks. Well, make sure you read GATA.org tonight, and you'll be smarter than the average bear. And let's take a look at yesterday's video. I'd like to thank everybody for watching. And who are all those people that are watching? Well, the people you see here commenting right here are some of them. And again, thanks for your comments. Let me just take a look and see if there's anything I can answer. And no, not too many questions here about what today's show was. And let me take a look here. I'm going to just go down. Again, I'd like to thank everybody here for watching. Nope, not too much to talk about today. Thanks, guys. I appreciate it. Well, let's move along to best deals of the day. Premiums are still pretty low. I mean, I don't know what the online guys, I do know what they're doing. I took a look and seen, I advertise to beat APMEX, JM Bullion, and SD Bullion as a local store here. Not only can I beat their prices, but I can give far better advice because I have the time. And we're a small business. That's only if you live in my local area. If you don't, unfortunately, you're going to have to find your own local dealer, and I'll get into that in a moment. Best deals of the day are any products that you can pay less than $100 per ounce for. I think right now that might be maples, possibly. Gold maples, I believe you can pick up for 100 or less per ounce. Krugerrands are under $100 premium right now. Eagles are still over $100. Don't recommend you buy those. You could buy a Krugerrand and an ounce of silver for the same price, just about, that you could buy a Krugerrand by itself for. An eagle for, I'm sorry. So instead of buying an eagle, buy yourself a Krugerrand and an ounce of silver. It's just, you get it for the same price. That's my point. And even better, gold bars. Gold bars you can pick up for less than $80 over spot right now. I think it's like 75, 80, something like that. Again, depending on the quantity. So those are the best deal as far as gold goes. And silver, best deal out there, I think, is 1 ounce bars, 10 ounce bars, 90% silver. They're all under $4 premium, I believe. And hang on a second, 275, 370. Yeah, all under $4 on a premium. And 100 ounce bars are a great deal right now. I think we can pick those up for like spot plus $3 or less, depending on the quantity that you're buying. Far better deal. Silver Eagles are still way overpriced, folks. Again, if you like to collect them, fine. Don't buy too many for a silver investment because they're overpriced for a silver investment. And again, that may come down, and I hope it does. But right now, they're still overpriced. Silver maples have come down. I think they're like spot plus 5 now, or maybe even less. Tough to say. I don't have my sheet in front of me. Other than that, I'm recommending 100 ounce bars if you can buy a 100 ounce bar. If not, stick with the 1s and 10s. Great deals right now. And what did I say earlier? I don't deal with, I said a lot of things earlier, sorry about that. I deal locally only, so if you don't live in my area, it's very important for me to tell you that I can't help you. I'm sorry. Again, unless you come into my store and physically deal with me. But I do recommend that you find yourself a good local dealer, even if you have to drive an hour or so to find them. Because at some point, even if you're buying stuff online, you're going to need to sell this stuff. And the last thing you want to do is ship this stuff out. You're going to want to find yourself a good local source that you can buy and sell with. And that's my recommendation. And also, it keeps the money local too. That's a real important factor. Even if you're paying a little bit more from your local dealer, you're going to get advice from him. You're going to get face-to-face advice. You're going to get to talk to the guy. And loyalty pays when it comes to small businesses. Small businesses take care of loyal customers. I have no doubt in my mind. The good ones do. So definitely find yourself a good local dealer. Well, that's it. This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Call me anytime at 954-493-8811 between the hours of 10 a.m. and 4 p.m. Mondays through Fridays. Happy to help you out with whatever questions you have or what the best deal of the day is. Hey, thanks for watching, and talk to you tomorrow. Have a great day.